Okay, guys, Sam here again, day two for this group, and I wanted to start off by showing you a website that I think is a really useful tool, particularly if you're doing some research on any particular coin, really. But particularly useful if you're on the trail of a coin that you may not be familiar with, or that you see getting some buzz, Twitter, Google, somewhere in the crypto sphere, and you want to take a look at it and learn a little bit more about it. So this site is CoinGecko.com. And they have a nice ranking system that they use here for coins. And rather than take a lot of time here in this video going through it, I encourage you to go over there and look at it and read about how they rank some of these coins and how they develop this scoring system. If you want to learn more, so if you're down here and you're got interested in Golem, you could just simply click on that. That'll take you to some detail where you can read more about it. Some of the background on the developers, its popularity, its the interest amongst the development community, its likelihood of profitability, all the things that you would look for in the longevity of any cryptocurrency. But I wanted to both show this to you, but then additionally, in the interest of demonstrating the technical approach and the methodology that I'm trying to show you, I thought I would just take the next two coins in the list here and via their ranking system, and we'd apply that same methodology to those coins to kind of show you that it doesn't matter what we're looking at it, whether it's traded in Bitcoin or dollars or euros or gold. It doesn't matter. So I wanted to just demonstrate that for you, and this can be analysis that can be useful for trading these coins as well as just getting comfortable with this methodology. So next two on the list, because we've already done Bitcoin and Ethereum, and we will circle back to update that analysis. But the next two on the list are Litecoin and Neo. So Litecoin you're probably familiar with. It's often compared to Bitcoin as Bitcoin being gold, Litecoin being silver. It's a very popular cryptocurrency. It's got a almost $3.5 billion market cap. So it's likely to be a contender and around for a long time. It has some inherent advantages over Bitcoin, i.e. it's much faster. The network confirmations are much faster, but not to get too much into the fundamental side. Let's just look at it technically. It's got high liquidity, so it's a very tradable coin. And I'm just going to take it over here and let's look at it. I'm going to show it to you both in dollars and in Bitcoin. So let's start with dollars. Just again, the point being to demonstrate that it doesn't really matter how we look at it. So let's go out to a daily. And this I'm on Kraken right now. Again, it doesn't matter what exchange you're on. This is just one of the exchanges that I use quite frequently. So if we look here, of course, again, we've just got a raging bull. But I want to break this down a little bit and show you how the fib relationships have been really significant, and sort of make the effort to, of course, it's always easy with the benefit of hindsight to see where this is going, but I wanted to try and demonstrate to you in real time, if you were trading this, how you would have experienced the fib draws and the projections if you were trading it a year ago, and how you draw those fibs and where your stops would. So I wanted to show you the trades you'd be in, what would be successful, where you'd be stopped out, and let you draw your own conclusions as to whether or not you think this would be successful. So I'm looking at a daily, and it'd be much easier if let's take this down to a 12-hour so we can get a little bit more detail here as to where we're first starting. So if we go over here to where we would have been trading back in March, really before it starts to launch. This is Litecoin down at $4. We've been up as high as almost $70. So our first draw here, we can see the benefit of our outline here. We've got a low that we could draw there, and we can pull up here, and we see that we had, let's see if I can get this. Actually, let's go to 8 hour. Let's go to 8 hours, see if I can show this to you a little bit better. Okay, so if we're trading this, we can see our first little drop down here. We get just in between the 50 and the 618, and we pop right up. So first trade. Now, I would likely draw, I would continue to keep that low, because this looks to me like you potentially could have an impulsive structure here. So drawing from that low, then we come back down, we look to the 50, we front run it by a few dollars, and let's see, try and show this to you as though we were trading it. So we're from our low to our swing high, down to the 50, push for a new high, we don't make it, come back down to the 382, and to the dollar, we go to the negative 23.6. So with that, I would do two things at that point. One, I know that this pivot here has some significance, so I want to draw from there. I want to be mindful that whenever you're making these draws, you always have the possibility of an all the way halfway back playing out, if you notice here where that lines up. But in real time, I'd be deferring to this pivot here now to the high. So if we're going through this, pulling it off to the right as though we didn't know what was coming. Well, at this point now we've not gotten a retracement to the 50, was front run at the 38, but we're right to the 23, to the negative 23. So at that point, I'd pull again up to that high. Again, note what happens as Ed just did before. It brings us right to that 50. Now we don't know. All we know is that we've got a market that's on a tear. So at this point, I'm still pulling from this, and I'm just dragging to new highs because I don't know where it's going. I'm just maintaining that draw because I know I've got a reasonable pivot. I haven't made a retracement. The market is still going higher. It's still going higher. I'm just keeping that fib pull to see if I can get any kind of a meaningful retracement. It's still going. So I'm just, at this point, if I'm not in, I'm just continuing to have to draw to new highs. So it looks at this point like we start to get some sort of a retracement. So we're positioned. We don't get even to the 38.2. It's just a raging bull market. So I draw up to that high again. New high. Now we're getting a more meaningful retracement. We're to the 50. Few ticks to the 618. We start to move again. Back down to test the 618 again. Now we're screaming higher. So was there a trade here? Absolutely. Of course there was. Of course. Right? You could have started at the 50, continued to add at the 618, stop on the other side of it. Beautiful trade. Beautiful trade. Working out beautifully so far. At this point, of course, that's the kind of scenario where tightening up is going to make a lot of sense, whether it's to the 50 or to the 618, depending on where you entered the market. But reducing risk would be the obvious thing to be doing here. Now we've got our first bearish signal. So if we were looking for that new high, which likely we would have been, fortunately we've tightened up our stops. So at this point, even if we just maintained a stop below the 618, we're stopped out of that position. So the fact that we've broken the 618 at this point now makes me want to be conscious of what's happening from the bearish side. Remember, these are always working in the opposite direction against you. So if I look here, now I'm going to pull this off because now I'm looking for bearish bias. Well, we get to the 50. We don't get a new low. We double bottom here. Now we're up very strong here. We get to the 786. Remember, it's a secondary fib, but it will be there on extreme moves. So we tick the 786. We start moving down. At this point, we're not quite to the negative 23.6 off of that. We're not quite there. Now, you could certainly make the argument that if you were short here looking for the 23.6, didn't get it, you tightened your stop, you got stopped out there, and now you're really watching it because you don't, at this point, if you're sitting here having been stopped out, or perhaps you trailed a stop and you pocket some profit here, the fact that we didn't get there on this move, hopefully you've tightened your stop a little bit there. At this point, my guess is we're out of the market, and we're just looking for new draws. So we don't know which way it's going. We're just looking for some pivots that look like they have significance to us that we can approach it with a new draw. So at this point, now, because we've broken the 618, the bias would now be to the long side. So we'd be pulling for longs. So we have this swing low here. Here's our first meaningful swing high. We're still going. We got to keep pulling. Got to keep pulling. There's our first retrace. We come down to the 50 and pop it back to again. Now here we've gone just a dollar or two through the 618, but then absolutely scream higher. Absolutely scream higher. So did you get stopped out there? Hopefully, you never want your stop so close to the 618 that what likely this is a stop run where, of course, traders know they're going to be stops just on the other side of the 618. So that's likely a stop run, which is what you see. And then, of course, it screams higher. And any trader who's been around long enough has had that happen to them where they thought, oh, I'm good. I'm just going to put it a few ticks below. You get ticked out on the low, and then it screams higher. Happens to all of us. But at this point, we know we've got the pattern in play, and likely there's algorithmic activity here that bought this and now screamed it up. So at this point, now we know we're going to have some profit taking here at the negative 23.6. Algos are going to take profits there, but we're screaming higher. So all we can do here is just work from this last pivot low and start pulling to these highs. Whether you're in or not, sort of a function of how you approach that last swing. We got to keep going. We've got new highs, so we keep drawing that. We keep pulling for new swings. We get the 386. There's the 50. Again, we wick the 618. We wick it. Let me get that precise, and then scream higher. But whenever you see that, you want to be conscious of the fact that there are going to be algos that could very well have switched off of this and are now looking to be short. So we want to start drawing from the other side. So take note, we come down, we go right up to the 618. Are we going to a new low? No. So again, this is, I'm trying to demonstrate this without the benefit of the hindsight here. So if you took a short there, for whatever reason, maybe you're bearish or you're just taking the swing. If you took that short there, and you had some profit initially, so of course, hopefully that's where you tighten up your stop, so your risk is reduced. We've got a good swing low here we draw from. Again, we continue to wick this 618, but look how now we're screaming higher. Did we get anything? Down to the 50. Down to the 618, almost to the tick, and we wick it again. So one of the things that you'll see often when you see this pattern starting to happen, you'll see it repeat over and over again. They'll wick the stops there. Right? You see this a lot in crypto and Forex as well. They'll run the stops and then rip it back the other way. Now here, we don't know what's going to happen. We would certainly want to be conscious. I mean, we're looking at an 8-hour chart, so we want to be conscious of what's happening on the other side. Right? So we've had this swing. We've gone up to the 618 on that side, come down to the negative 23.6, hit that target. So that would tell you that there's potential here for a trend change. So at that point, that's a reasonable spot to be looking for a long. But you'd be stopped out. These are very small losers. Take note of that. And many of them, because the market is reacting and getting off in the other direction, you got a good opportunity to reduce your exposure. So now we definitely have a bearish environment. So we know we want to be pulling from the swings. See what we got. So we've got one here to the 618, hits the target. I pull from here. We go to the 50 to the tick, and look at that. We go right to the 23.6. I mean, tick for tick. Right? So clearly there's algo activity in here. Now we're through it. I'd be continuing to pull. Note we just wicked the 200 period up to the 618. Holding. You certainly could be short here with a tight stop. No reason to take too much exposure here. Now we break. Now look, we go to the 786. So at this point, now we switch to a bullish bias. We're going to swing from this low. There's the 23. I'd go to the high, to the 618, up to the 23 and through it. So I pull to a new high. So these small little trades where you're stopped out, that's just trading. That's just the nature of the beast. You're going to get stopped out. You're going to get stopped out frequently. Of course, what's important is that on those losers, you've reduced risk, particularly because you've seen the market move in your favor. So you've been able to reduce the exposure. So these are very small losers that you're taking, looking for the one that performs as we're expecting it. So we're going to hit the 50 or the 618, and then we're going to go to the negative 23 or the negative 618. So at this point, all we see is just a raging bull. So I've got a pivot low here, and I'm putting in new highs. I'm looking for a chance to get in it. New highs. New highs. Got to keep pulling higher. Now we come down, we wick the 50. Good sign. Good sign. Where do we go? Failed high. We don't get a new high. We're looking for the negative 23.6. We don't get it. We're back to the 50. And that's where we sit right now. So where does that go from here? Well, we've just double bottomed on the 50, right? We've clearly got some support here that's been hit twice. So, and of course, it's always a good thing to do is to hit these highs. As you know, those are likely support zones. So we've wicked this. We've tapped the 50. You know, Litecoin tends to move in tandem with Bitcoin. So depending on whether or not we've just double bottomed in Bitcoin, as if you're watching it, as I'm sure you are, you've seen that happen. We've done something similar here in Litecoin. There's no way to know really, again, how this resolves. We have some bullish bias, but see how this continues to do the same thing here? We get to the 618, stops are run. Those little wicks are just running stops, and then it screams back the other direction. So really, we've got an unresolved market here. So we're in a war between fibs. Bulls and bears are fighting between these two fibs. The longer term bias, the trend is up, so you'd want to defer to the long side. So if I were trading this, what I'd want to see is a little bit more of a push up here. I'd want to see a little bit more of that higher low. I'd want to see this up at least to the 382, then a pullback. Maybe then we're making a sorry, I don't want to keep that off. Then a lower high, and I'd want to see something along those lines there, where I could trade that 50 to that 618, which is going to be very tight, very small. Again, remember we're in an 8-hour chart here. But now, just to bring these back, this is where the oscillators might give you some help with some timing. Pull that off. Let's take it down to a 4-hour. Get a better look at it. So, I mean, potentially there's a trade there for sure. But you got to be aware of the fact that we're fighting the other side of it. So the bears are trying to push it down. They're looking for that negative 23.6 on the other side, which would be a break of the 618 and this support here. So do we get there? That would be bearish. Too soon to tell. Then I'd use some other structure tools here. I'd put a channel on this. We know the 200 period is down here between the 50 and the 618. How does that resolve? We probably won't know until tomorrow. You make a reasonable case that the best place to be is out if you're not in. I happen to be long this market. My stop is below this swing here because I'm on the other side of that 618. I want to be outside of that wicking range that we've seen demonstrated over and over again. We saw it here. We saw it all along the way, the stop runs at the 618. So I want to be on the other side of that. I'd like to see this hold. Double bottoms, good sign that we'll see some support here. But the second test, some would tell you that that's the dangerous test. That's when it can break. So far we're holding. Unresolved. The oscillators would tell you that we've got some upside here before we turn down, if we turn down again. You've got the real possibility that you've got an ABC here that we're still correcting, and then we've got this kind of a scenario happening. Very possible. Let's go back to an 8-hour and look at that. All right, this is the important swing that I see. There's the 618. I want to give it a little room because of that wicking tendency that we've seen. But if we're going to go down, take note here that we've got the negative 23.6, which is the target for those algos, and the 200 period sitting right there. So, I mean, this is kind of a judgment call on based on your account size and your money management rules. You could make a case that you're better to keep your stop a little bit below that so that you don't just get wicked out here. But I'd rather get stopped out. If I get stopped out, I can live with that. And then look to re-enter, and I'm looking to re-enter on that higher high. I want to see a swing that's impulsive. I want to see a good move off of it. I want to see a retracement. And the reason, remember, the reason this is so important, this little pattern here that we talk about, or that I try to encourage you to pay attention to, particularly for entries, is that if you're entering here, our stop is the last swing low. So the risk is much smaller. That's why I always am surprised by people that wait for breakouts, because if you wait for this to break here, now your stop theoretically needs to be below the pivot. I'd rather take the pivot. I'd rather buy it when it's coming down, look for some support here. With my stop, I'm taking less risk here, right? Because this could take off, but my risk reward is better here. So I encourage you to always look for that. If you're unsure, look for that meaningful push, the first retracement, because those that were there for that push will take profit. That's what creates the retracement. Then the stabilization, maybe some oscillator timing to help there, maybe a fib retracement to help there, and then the push higher with a stop, that first initial stop below the previous swing low. So you can really be dialed in on your risk reward. If it starts to move in your favor, then you can tighten up the stop, reduce the risk. Maybe you're just below the 786, then just below the 618, then to the break even. Just a suggestion, but that's how I approach it. So moving on. Let's go to Litecoin in Bitcoin just to demonstrate this again. So in Bitcoin, let's go out to a daily. And there we sit. So, of course, I'm trying to do this to show this to you without the benefit of hindsight. Let's go down. Let's go to an 8-hour. Before we went higher, and just try to demonstrate to you how we'd approach this, trading it. Let's go back to March of this year. So let's get as though we didn't know that was coming. So we've got a swing low here, and all we're doing, again, you're going to see this over and over again, is we get some decent swing action here. We've got a low. We potentially got some impulsive behavior. The first swing down, we hold the 618. And off we go. Where do we go? Right to the 23.6. Right. So at that point, you'd be pulling for that high. It turns out we go from there. Then we go to the 618. So if you were long, you might have taken partial profit here, taken a stop to break even, pull it to the new high. We're down 50, 618 range holds. Then we're off to the 23, new high, to the 50, to the tick. Boom. Now it just explodes. So if you're long, that's why we're trading crypto, right? For that kind of explosive action. It's just an absolutely textbook, perfect, right to the 50 setup. Partial profit here, probably partial. I mean, ideally, there's partial profit here, partial profit here. Now you got a runner. So along the way, all we can do is keep pulling from swings. All we can do is pull from that. Now we start to retrace. The inevitable retracement, right? We assume, if you will, that we don't know what's coming. So here's our first retracement. The 618 holds. We're starting to head higher. We get a new high. Got to pull it to a new high. So where do we go? Right to the negative 618. Again, that's not an accident, right? So from a tick or two above the 618 here to the 618 there. Now all we can do is work from that swing high. We know this was a meaningful swing low here. Now we're coming back down, profit taking. The 618 holds. Now the 618 breaks. The first bearish sign that we get. So at this point, I'd pull this off. I want to be cognizant of what's happening on the other side of it. So I'm going to pull to that low. I don't get to the 50, so strong. Though you could make a case, you could make a case that on a smaller time frame, this would be your swing. Since we're on an 8 hour, if we were down to a 4 or a 2 hour, there's your 50, there's your negative 23. But let's use the all-time high. See where we're at. Now we're back to the 50. Now we break the 618. We hit our target. So algos took profit here. Even if we pull to that low, there's the first break of the 618. We're suspicious of that because we've seen this tendency for the market to wick and run stops there. But now we've broken the 786. So now if we were trading that, we took a small stop. Now we're biased to the bullish side. Swing to the low, nothing. New high, we're waiting. Oh, there's now. Okay, clearly could have been long here. Likely stopped out there. Likely stopped out because you've broken the 618 by far enough. But because you got off to a decent start, ideally the stop was moved to lower exposure. Now we're back screaming to the upside. So now welcome to trading, right? So if you're stopped out there and the market screams away from you, welcome. That's get used to it. Happens all the time. So really at this point, all you can do is watch it if you're not in it. So stop running. Hard to know. Hard to know. Could it be working off of this low? Yeah, could be. But I would have been working from that. Now we're 2 and through 23. We're going up to 618. We tick it. So we know there's profit taking there. Now we start coming back down. Litecoin to Bitcoin. Now we start coming back down. So at this point, because we've had profit taking, we'd pull to that high. We start coming down. Front run off the 50. There's the new high. So we hit the 23. Pull to the new high. Hit the 23 again. We're pulling to the new high. New high. We start the retracement. Ideally, you'd be off of this low at this point. You come down to the 50. $618's getting tested. We didn't get the 23.6. So actually, you'd have pulled here. Note where that lines up. Now we break the 618. So at this point, you got to be looking for the bearish side. Again, it's a methodical approach, right? We're just following the swings and looking for that fib relationship. Front run at the 382. We don't get the 23. We don't get it. Got to pull to a new low. New low. Boom. Break it. We're pulling for bulls now. Do we know? We don't know what's happening. Down to the 382, we got to pull to a new high. Possibly a front run on the 50 there. There's the 50. Off to the highs. Close enough to the 23. That's likely profit taking. I mean, right. So even if you had a few stops here, they're going to be relatively small. Look at that. That winner is just gorgeous. So you're pulling to the new high. I'd work from that low. I always want to look at all the way halfway back as well as the most recent pivot. We're to the 50, bouncing on the 50. Break. Looking for the lows now. I've got a swing I can pull from. Got a new low. There's the 23, but I didn't. I guess you can make the case you were front run at the 23 here, and you hit the negative 23, or excuse me, front run at the 38. New low. There's the 23. Continuing to pull to new lows. That's interesting. Spike to the 50, we go through it, but then we rip back down, likely a news event. Now we're screaming higher. Now we're pulling for bulls, pulling to the long side. Don't like it. Don't like it. I don't like that kind of long wick. I'd probably pull from here up to a new high. 382 front run, and that's where we sit right now. You know, my point is not so much in this video to show you specific trades. It's to show you how this pattern repeats over and over and over again. Right, so we've looked at it in Litecoin to the dollar, Litecoin to Bitcoin. We're on 8-hour charts, and I promise you this is happening all the way down to the 1-minute chart. The algos are working amongst all those time frames. That is part of what makes this challenging. But even if we just sit here and we go to a 4-hour, you're going to see the same thing just on a different time frame. So I mean, I can look at this one right here and tell you that's likely. There's the 50. We go all the way to the -1, all the way. Scream higher. Now we got to pull from the other side. 618 to the 23. Screams back down. If you're using that, you know, if you use that, I mean, clearly a lot of volatility right there. You could have taken a trade there and been stopped out easily. Could have happened. I tend to want to discount these. So if I'm here from this last swing low, front run, 23 through it, I'd be pulling to new highs. We're to the 50, and this is where we left it. This is where we sit right now, Litecoin to Bitcoin. We've hit the 50. We fail to get the new high. So we're, again, just same as the dollar. We're in a range. The bias is to the upside because we've broken the 618 here. But we've also made a deeper retracement. We've made this retracement here, so we can't work with this swing because that's too high. That's gone too far. We can come back one, look at it. Well, there's a 50 there. Maybe. Don't know. Up to that high. This low back down here. That's really where we sit. So if you're not in the market, it's really, there's really not a trade here that's ideal. Really not a trade until you see more resolution here. Where do we get a lower high or a higher low? What are we going to get? Too soon to tell. Last market, just to demonstrate here. What are we? 32 minutes. Neo, right? This is the other. This is after Litecoin on our coin Gecko, right? We've got Neo. It's the third on their rating, right? Well-known coin, very influenced by what's happening in Asia. Let's see if it repeats here. This is Neo to the dollar on Bittrex. On daily here, let's go to a 12-hour so we can see this a little bit better. Let's try to show you what it would look like without the benefit of hindsight. So let's go back, same kind of idea, back to May. So where's the low? This is where this Bollinger is useful. So there's the first one. Yeah, you can see it better here. So there's the first one. There's our swing high from this low. 618 holds. We go up. There it is again. So we blow the 23. We blow the 618. Right, like there's the profit taking. So we know we've got a low here that's worth paying attention to. All the way up here. Now we come back down. 618 holds. Off we go again. There's the 23. At this point, we're just pulling from the new highs. Now it's getting insane. So now at this point, all you can really do is go, well, where's the last swing low I've got that's significant? That's the pivot. This again, this kind of explosive movement. That's why we're all trading crypto. Now we're looking quite bearish. So the fact that we broke the 618 was the first clue. So at that point, we'd be pulling from the other side, or at least paying attention to it. There's the high. There's a swing low. If I open this up, I think you'll see that we come down. We tick the 50 to the 23. New low. There's the 50 again. Now we're going to other way. 618 holds. There's the break of the 618. Now we're looking to the other side. Swing low. Yeah, sorry guys. Swing low. Wicks. Don't like them. Long wicks. There's a good trade. Right to the 50. To the 23. I'm going to pull to a new high. Boom. Right to the 23. Right? Textbook. 618 to the 23. Pull into new highs. Pull into new highs. Right to the 50. To the tick. Right? This is a 12-hour chart of NEO. Again, I think I'm kind of making my point. Now, long wick breaks the 618, so we got to pay attention to the other side of it. Again, we're trying to do this on the assumption that we don't have the benefit of hindsight. Now we're breaking to the other side. So if you traded it, you're stopped out. If you were looking to the short side, you're out. Small losers. Long wicks. Could make the case that you got stopped out again. Volatility. Tough to trade that. Could easily have been stopped on both sides. As long as they're small, the winners will well compensate you. Now we're just screaming higher. So all you've got is a low to work with. There's the first pull, second pull, all the way to the negative 618. Just screaming higher, screaming. You think you've been well compensated for a few stops? Just insane volatility. Now look at this. From here, I'm at that low. We come down. Here's the 50. Are we going to get the new high? Nope. 618 breaks. Now I got to look from the other side. There's my first low. There's the second low. Well, there's this one. So we can deduce that there are algorithms here that are trading this because we got the 618 right to the 23. So that's a meaningful swing. I'm going to pull there. That's likely profit taking. We're back down. I'm going to pull here again. Coming up to the 50. We're through the 50. 618 holds. We're going back down. If you're in this short, hopefully you've reduced your exposure, tightened up the stop. Back to, we don't get a new low. Don't get a new low. We're going to get it. At this point, you'd be looking for, here we're on a 12-hour chart, so we'd be looking for pulls here. There's to the 50, we're between the 50 and the 618. We get to the 23 target, to the 618. We're through the 618. Other side. Other side. So, over to the pull. We're from this low. We're just pulling as we get new highs. Down, oh, look at that. Down to the 618 to the tick. $618 gets tested again. Boom, right to the 23. Right to the 23. Profit taking. Got to pull to the new high. 618, profit taking. Now we're just screaming higher. Got to pull to a new high. You know, if you're long, again, it's just a perfect example of why you got to continue to pull the trigger, because you don't know which way it's going to go. You don't know where you're going to see this kind of explosive movement, although we're all somewhat biased towards the long side because that's right. It's unlimited on the upside, and I think most of us would share a bullish bias in crypto. So we're all looking for the home run ball that's to the upside. So if we're sitting here, we know we've got a good swing. We've had this pivot here. Look, this was absolutely textbook to the 618 to the tick. So even if you were just a few ticks on the other side of the 618, look at that winner. That's partial, yeah, partial. Letting one run. Has that compensated you for a few stops? I mean, now you got to pull that. There's the 3.8. So front run on the 3.82. Remember, the stronger the market, the greater the likelihood that the 50 is front run at the 3.82. Now we're still. Now we're just in just insanity. Back to the 3.82. There's the 50. 50 again. 50 again, right? So if you're in that trade, you know, you're off to a great start here. Have you tightened your stop? Yeah, I would. You're back down here. Are you a little nervous? Yeah, maybe. But it's just another trade. You can't get too attached to any one trade. This has been an incredibly profitable market for you. You're at the 50 again. Are we going to get the new high? Don't know. At this point, I'd be conscious of the fact that I'm hitting resistance on the other direction. I've hit the 50 on that side. Can I get through it? No. Looks like, so if you were in this here, you're stopped out right there. So we've got, actually, at this point, you've got the full, now we're through it all the way. So you're through the 618. So take note here, you went to this, from this high to low, wick the 50, we're to the, not only the 23, but we're down towards the negative 618. And we just were at the 200. So at this point, now you're pulling all the way. I'd also want to pay attention to that pull and that pull. You want to kind of see which one the algos are running from. They're through the 618 on this one. There's the 50. And that's where we sit right now. So if I were to take this down, let's go down to an 8-hour and look at this. This is us as we sit now. So take note here. From that all the way back to that, all the way to that low down here, we stayed above the 786. Remember, that is a secondary fib, right? So it has significance. So that's a meaningful swing low. If I go here, we've broken the 618. Gives me a slight bias to the upside, despite the fact that we've seen this huge retracement. And then I'd start looking at fibs within the fibs. So we've got this here to the 50, to the 618. Right? They're always going to be there, right? That's because it's how the algorithms are trading it. So to the 50, to the 23, through the negative 618, pull it again. So we know we've got a good swing here. We're through this. We've wicked through. Likely stop running. Happens. Get used to it. Happens all the time. You could make the case that we've got some sort of an Elliott count here that's unfolding. There's a... This looks corrective. Possibly. Let me take that to a 4-hour. Actually, let me show you a little trick that I do sometimes when I'm not sure, because if I look at this here, if I look at this, I see a 1, 2, 3, 4, and that looks to me like a failed fifth. So something that you can do when you're unsure about the count is to switch to a line of the closes, and you can sometimes see it better. So if I look at that close, I can see 1, 2, 3, 4, 5. So when I put the candles back on, I think what we have here is what's called a truncated fifth, since we held right on that 50. Of course, note from that low to that high, we tick the 50. Right, we come down, and then there's front run here. But my guess is this is just there's so much bullish bias here that this 5 doesn't complete. So likely what we have here is this fifth. Now this is some Elliott nuance. Again, you don't. I think I've demonstrated clearly that you don't need it. But as I'm looking at this now, this is a reasonable possibility here. So I would draw as we. Where is it? I would look at this here thinking possibly we've got one more leg down. So where's the trade? Well, the bias now is if we think that fifth wave is going to resolve, then we're looking at this right here. Okay, so let me take some of that off. Where's the trade? Well, there's the 200 period right there. Now let's add the oscillators. We're working our way up. That's a 4-hour. This is going to be a meaningful swing right here. If we get on the other side of that, then the count. We've already blown through the wave one, the wave one low here on this movement here. So potentially we've got an ending diagonal. Again, it's a little bit of Elliott nuance. It doesn't really matter. What matters is what happens here with the fib swing. Do we break the 618? Do we stay within the channel? I mean, it's possible. It's possible that we get a deep retracement here and we get up to the 786. These are all variables, right? The market is imperfect. We don't know. We're just trading probabilities. But if you're biased now to the short side, this is the next trading opportunity, looking for this to, at the very least, come back to this negative 23.6, which was the swing low here, which happened to be right at the 786 of that major swing. So, you know, that's just a matter of, really, that's a matter of what we see happening in the markets broadly, what we see happening with Bitcoin, what's happening with any news out of China, because NEO is very influenced by what's happening in the Asian markets. Do we get a lower high here that gives us some confidence where we can enter with a relatively small risk, because we want to be just on the other side of this 786 outside of the channel? If we get stopped out there, then we're wrong, and you know, perhaps the market has put in a higher low here. I don't love this because of how deep this is. If we're looking for a bullish count, well, look again. You've gone right to the 786 here. This swing has gone right back down to the 786, and we've double bottomed on it. Double bottomed. So if we get even more granular and get down to a 1 hour, can we see a 5-wave sequence that would finish this count? Possibly. Possibly. You could make a case that there's your 1, your 2, your 3, your 4, your 5. It's possible. It's possible. At this point, it's kind of a wait and see. So this is not inconsequential. That's an interesting low. Let's tighten this up so we can get very precise with it. So now that we tighten it on the 1 hour, we can see we went through by a few ticks. My bias here would be to the short side. I'd be looking for the sell, but I'd want to be real aware of what's happening in the broader market. And by that I mean Bitcoin. Any news out of Asia, because you've got your risk reward scenario here is better to the downside, because we can trade this at the 50, right in line with the 200 period. We can trade that with a relatively tight stop for that first entry, looking for the push down here, So if you're looking risk reward, that'd be minimum target. That'd be your stop, 5 to 1. 5 to 1, is that tradable? Of course. Of course, that's exactly what you look for. That's as good as you can hope for. So with that, I'm going to wrap this video. We're at 47 minutes. I'm going to do another one with an update on what's happening in Bitcoin, Ethereum, so look for that shortly. Okay, guys, talk to you later.